Here's a question we hear all the time at Alliance Group. Free living benefits sound great, but how exactly do I get money from my life insurance policy if I get sick? How does that work? All right, the answer is simple. You activate the living benefits features on your policy to accelerate the death benefit. So what do we mean by accelerate? Well, living benefits essentially let you have early access to your life insurance policy's death benefit if you get seriously sick or injured. So what you're doing is accelerating that benefit from the future, when you die, to today, right now, while you're sick, while you're struggling, when you're going to need that money the most. All right, so here's how that looks in a real world scenario. Let's say you put a living benefits policy in place today. Now, right away, from the moment your policy is issued, you are covered for the full amount in case you die. And that death benefit is payable in full to your chosen beneficiary or beneficiaries from the moment you pass away. Now, this is great, but nothing new, right? Life insurance has worked this way for years. But remember, in this example, you have free living benefits included on this modern life insurance policy that you have. So instead of only being covered if you die, you also have the ability to accelerate your death benefit if you get seriously sick or injured. Cancer, heart attack, stroke, paralysis, major organ transplant, kidney failure, blindness. There's a lot of conditions that are considered triggering conditions that would activate your living benefits features. The amount that you're able to get in your hands will be based on the severity of your illness. The more serious the illness or injury, the more money you're going to be able to get your hands on. All right, so let's look at a real world example. Say you have a $405,000 life insurance policy and you made sure that it was our modern coverage that includes free living benefits. Smart you. All right, now like any life insurance policy, if you kick the bucket, this policy is going to pay out $405,000 to your loved ones, just like any life insurance policy would, right? But let's say you don't die. Let's say instead you were diagnosed with stage 3 thoracic cancer. Now, besides being generally terrible news, this also presents some immediate financial challenges for you. You're going to want to take some time off work to deal with this and go through treatment. You have all your current bills that you're already paying, plus now you have a whole heap of new medical bills related to testing, and health insurance isn't coming close to covering some of those treatment options. In fact, your doctor has presented you with a treatment plan that after insurance is going to cost you thousands of dollars out of pocket, and since you're now working part-time or maybe not even at all, your expenses have gone up and your income has gone down. Financial stress is quickly becoming a big part of this already bad situation, right? Now, here's where having living benefits comes through in a huge way. Since cancer is a triggering condition, you would be able to file a claim through your living benefits features, and the life insurance company would give you options based on the severity of your illness. Now, in this example, for a stage 3 cancer, your offer may be, say, $343,000 in return for accelerating your full $405,000 policy to get it. So, if you choose to do a max acceleration and accelerate 100% of your death benefit in return for 100% of their offer, you would receive a tax-free check made out to you for $343,000. And since you accelerated the full $405,000 policy to get it, there is no benefit remaining in the policy and your coverage would end there. But now you've got plenty of cash to take as much time off work as you need, choose the very best and most advanced treatments available without worrying about what your health insurance will cover, and generally just take all the money worries out of this already really difficult equation that you have with this cancer diagnosis. That is the power of having living benefits. But you don't actually have to take the full $343,000. You could have chosen to take half of their offer and thus accelerate only half of your death benefit to get it, right? So in that case, you'd receive a check for $171,500 and be left with $202,500 of coverage in ongoing life insurance, right? Or you could take a quarter of it, or you could take 10/13ths of it. You might even say, give me $100,000 and let me know how the math works out and what I have left. Or you could choose not to accelerate any death benefit at all. Living benefits gives you options. And if life decides to throw you a curveball, as we all know life tends to do, options are wonderful to have, and that's exactly what you want in those scenarios. Remember, in our scenario, if we owned an old-fashioned life insurance policy without living benefits, you don't have any options. You didn't die, so you wouldn't get any money, and that cancer diagnosis is going to have the potential to wreak absolute havoc on your financial picture. By the way, this is not just a hypothetical example. Those numbers that I just went over were based on the real life experience of just one of our thousands of real life living benefits clients. Amanda Thomas put a $405,000 policy in place for herself, and less than 1 year later, she was diagnosed with stage 3 thoracic cancer. She put in a claim with the company, and about a week later was offered $343,000 based on the severity of her illness, and she chose to accelerate the full amount of $405,000 to get it. Less than 2 weeks later, the insurance company deposited $343,000 non-taxable dollars into Amanda's bank account. She has no coverage going forward because she did the full acceleration, but she was able to use that money now to replace her lost income and pay for the very best treatment that money could buy. And because of her living benefits money, she has since beaten that cancer, I'm happy to report. And she is living a happy, productive life as a nurse, wife, and mother to her 5 kids. Now, if Amanda had had the old kind of life insurance that does not include living benefits, she would not have had any options. Since she was still alive, she would not have gotten a dime from her life insurance policy. And as she will tell you herself, things would have taken a very different turn. Now remember, the size of the offer is based on the severity of the illness. So for the stage 3 cancer, Amanda was offered $343,000 if she accelerated the full $405,000 benefit to get it, right? Now, if that were a stage 2 cancer, that offer might have been $150,000 in return for the full acceleration. An even more minor stage 1 diagnosis might have gotten a $50,000 offer. So in that scenario, if you were in that position, you might choose to actually leave the $405,000 in place and not accelerate anything. Or maybe if you were paying $50 a month for a cheap term policy and it was a year old, you might say, I don't know, $600 that I've paid into this, $50,000 I'm getting out. That's a pretty good return on my money. The point here to remember is the choice is yours. And that's what living benefits are all about, having choices. The greater the impact on your life expectancy going forward, the bigger your offer will be from the company and the more money you'll be able to access. All right, now I know what you're thinking. Why would the insurance companies offer something like this? It seems too good to be true, right? Well, as you might expect, it's not out of the goodness of their hearts. It's math. When living benefits were being developed, insurance companies realized the added value to their customers of allowing policyholders access to their death benefit early if they got sick. They knew that if they could make offering this early access a zero net sum proposition for themselves financially, the added value for the client would help them sell lots more policies, right? So that's what happens. When you file a living benefits claim, the insurance company applies a formula to determine what their offer is going to be. Now, that formula takes into account the present day value of the future death benefit, the severity of the illness, the calculation of your new life expectancy, some small fees and expenses for doing the acceleration, etc. And then they send you an offer that shows all of this math in clear terms and what their offer would be for a maximum acceleration. The idea is the insurance company is not affected financially whether you choose to take a full acceleration or no acceleration at all. It means the same for them from a dollars and cents perspective either way. But the added value of the client getting options in those life-changing situations helps them sell a lot more policies, right? It makes those policies so much more valuable and useful for the client. Now again, it's not out of the goodness of the insurance company's hearts that they're doing this. It's just math. Let's take a look at our real-life example again. After applying this formula, the insurance company was able to offer Amanda Thomas a choice. $343,000 now, while you're alive, going through cancer treatments, out of work, and could desperately use it, or $405,000 to your family when you pass away. It was a zero-sum scenario for the insurance company financially. No matter what she chose to do, it produced the same result to their wallet. But having those options and access to that money meant the world of difference to Amanda and her family. So no, living benefits are not too good to be true. It's a calculation that makes financial sense for the insurance company while providing potentially life-saving access to crucial funds to you, the policyholder. Do living benefits really pay out? That's another question we get a lot. The answer is yes, literally thousands of times yes. We have decades of experience at Alliance Group and thousands of living benefits claims under our belt. Our carriers are A-rated companies that actually specialize in living benefits and that stand behind those promises. Amanda Thomas is just one example of a real-life client that Living Benefits has helped over the years. We've got loads of real client testimonial videos from real policyholders all over the country who are willing to share their personal Living Benefits claim stories. Look below to check those out, and we'll make sure to link to them in the comments. All right, so let's review. Living benefits are free. They come built in with our policies and you don't pay anything extra for them. Living benefits offer huge added value. We're processing claims and getting crucial money into our clients' hands every day when they get sick and need it most. And living benefits are not too good to be true. It's simply a math formula. So if you've still got an old-fashioned life insurance policy that doesn't have these free features built in, you've got the wrong stuff, and we can help you rectify that situation. Thank you for taking some time to learn with me today. I hope it was valuable to you.